There are thousands of stocks in the US market, but only a few actually matter if you want real wealth. In this video, I'll show you 3 stocks I'm buying aggressively, and the hard evidence behind why they stand out. Most people lose money in the stock market not because they picked bad companies but because they don't understand why they're buying. Today, I'm breaking down my aggressive investment thesis on 3 US stocks I believe offer asymmetric upside compared to the rest of the market. Stock 1. Nvidia, NVDA, the AI infrastructure leader. Let's start with Nvidia because Nvidia is not just a stock, it's infrastructure. Every major AI system from data centers to cloud computing, machine learning, autonomous systems runs on Nvidia's GPUs. This gives Nvidia a dominant position in the fastest-growing technological shift of our generation. What separates Nvidia from thousands of other stocks is its economic moat. Competitors can't easily replace Nvidia because its advantage isn't just hardware, it's software, ecosystem, and scale. Financially, Nvidia continues to post strong revenue growth, expanding margins, and massive demand from hyperscalers and enterprise clients. This is why institutions continue to accumulate this stock. I'm buying Nvidia aggressively because when you invest in Nvidia, you're not betting on one product, you're betting on the future of computing itself. Stock 2. Intel, INTC, the contrarian turnaround play. Next is Intel, and this is where most retail investors get emotional instead of logical. Intel is one of the few semiconductor companies in the world that actually owns and operates its manufacturing facilities. In an era where chip supply chains are becoming geopolitical assets, this is a massive strategic advantage. Intel is currently trading at a valuation that already prices in failure, which creates opportunity. When expectations are low but fundamentals begin to improve, the upside can be significant. On top of that, Intel is receiving government support to expand US chip manufacturing, while restructuring its operations to compete more effectively in AI and data center markets. Intel is not a momentum play, it's a value plus catalyst investment. That's why I see this as a high-reward contrarian position. Stock 3. SoFi, growth at a discount. The third stock is SoFi, and this is a classic example of price moving independently from business performance. SoFi operates at the intersection of banking, lending, and digital finance, sectors that are steadily moving away from traditional institutions. While the stock price has declined, the company continues to grow its user base, expand product offerings, and increase engagement across its platform. This is where professional investors separate themselves from emotional traders. Falling prices in fundamentally growing companies often present the best long-term entry points. SoFi gives me exposure to fintech growth at a discounted valuation, and that's exactly where long-term wealth is built. So why these 3 stocks out of thousands? First, they are positioned in long-term secular trends: artificial intelligence, semiconductor independence, and digital finance. Second, they offer asymmetric risk-reward, meaning the upside significantly outweighs the downside if execution continues. And third, these companies are actively followed, owned, and accumulated by institutional investors, which matters more than hype. This is not about chasing quick money. This is about positioning yourself where the world is going, not where it's been. I'm buying these stocks aggressively with a long-term mindset. If you understand the businesses, control your emotions, and stay patient, time becomes your biggest advantage. If you found this breakdown valuable, like the video, subscribe, and let me know which stock you want me to analyze next. This is not financial advice, it's my personal investment analysis. Always do your own research. Don't forget to like and subscribe to this channel so you will be notified anytime we drop videos like this.